I think what factors really into our thinking is economic growth, and we've been very clear, and a major priority of this administration is to create economic growth at 3% or higher. And that's always been a combination of what was tax reform, tax cuts, regulatory changes in trade. Trade's always been a big component of this. And, look, there's a lot of volatility. I would say one of the big differences is today is because of electronic trading and the Volcker rule where people can't principal things. Tom, as you know, you get more volatility in both directions. But we are focused on creating great opportunities for U.S. companies and U.S. workers. And we're absolutely conscious if we get this right, this is a big increase in growth in the United States, jobs in the United States, exports. I mean, this is the first time I could see a clear path of shrinking this trade deficit to zero over a strategic time period that's real.
Mr. Secretary, has the president ever expressed any dissatisfaction about your recommendation of Jay Powell to be Fed chairman directly to you? Have you heard? And I know you saw some of the conjecture in the past couple of weeks about that. Did he mention it directly to you? Did you hear about it? Is there any veracity to any of the reports?
I think, I'm always going to be careful about private conversations between the president and myself. But I think, as I've said before, I've known the president for over 15 years. I traveled with him for a year on the campaign. Of course, there's issues we agree on. There's issues we don't agree on. I tell him what I think. And I respect that he is the president. He was elected. And these are his decisions. So I will continue to give the president my best advice. And I do think the president was pleased with the speech last week.
I was going to ask you that, because I think before the speech it was, I can't think of a single, I don't remember the quote, something like, I can't think of a single thing I like about Powell. But then it was a speech. I wonder if now he says, well, I like that speech. He found something that he did like. So he was gratified by the speech that seemed to get a little more dovish last week.
I will tell you he liked the speech. And I would also just say, I think, as you know, Jay Powell's got a difficult job because he was left with a gigantic portfolio that was increased over $4 trillion in the previous administration that he's trying to right size. We had interest rates at zero for way too long to try to help the Obama economy, and it didn't do much. And he was left with the hard work to try to normalize rates and stabilize a portfolio so that he has the firepower if the economy slows down to juice the economy.
There were reports last week, Mr. Secretary, that you had been asking people what they thought about the idea of reducing the balance sheet faster rather than raising interest rates. Any thoughts on what you've heard back on that or what you think?
I think it's unfortunate that in private conversations with a Treasury borrowing group that people repeat what I say. But I did ask them, because there's obviously two tools for monetary policy. One is the portfolio and one is short-term interest rates. And I did solicit views. As I solicit views on lots of things, the whole purpose of the Treasury Borrowing Committee is to give feedback to the Treasury. And they do a terrific job. But I think it's unfortunate that people feel compelled to walk out of rooms in private conversations and speak to the press.